this is all you need to know about money. This is boiled down to the 3 principles of money accumulation.
Money mindset.
Hello, my name's Neil Doig. I am the author of Millennial Money Mindset. If you want the fruit, you need the roots. Today we're going to talk about the 3 laws of money accumulation. And this is chapter 1 of my book, Millennial Money Mindset. If you want the fruits, you need the roots. So we're going to cover pay yourself first, diversify, and rebalance. So essentially this is all you need to know about money. This is boiled down to the 3 principles of money accumulation. So if you follow this, then this will bring you success with money. So let's get through it. So pay yourself first. So this means setting up an automated system that pays yourself every month as soon as you get paid, rain or shine. Essentially, if the market's high, it means you buy less shares. If the market's low, it means you buy more shares. So saving sucks. There's an easier way. Why stress and worry about timing the market when you can do it every month without fail? So basically setting up an automated payment system so you don't have to think or worry about timing the market. So it basically reduces your stress and worry around when to invest, and basically it uses pound cost averaging. So pound cost averaging means averaging out. Essentially it's a great strategy to use, and it's taken from The Richest Man in Babylon. Pay yourself first. And I've also used, so Adam Smith, who wrote The Wealth of Nations, he also talks about demand supply. Essentially it's creating your own demand supply by paying yourself first every month. It creates your own, it basically fuels your investment system, so you don't have to think about saving, you have to think about budgeting. It just happens automatically. So that's pay yourself first. The second rule of money accumulation is diversify. So essentially having different asset classes working for you. So think of it like a team. So you have a team of assets working for you, which have, each asset class have different strengths and weaknesses, and we talk much more detail in other videos. So depending on how detailed you want to get, diversify. So in chapter 3 of Millennial Money Mindset, if you want the fruits, you need the roots, we talk about splitting your money between land, business, and reserves. And this is taken from the writing Talman, which is written thousands of years ago, and essentially this strategy's worked for thousands of years. So essentially splitting your money between land, like housing, reserves, like lending money to companies or governments, or cash or insurance. I kind of bundle that up as reserves, or businesses. So this is shares or having your own business. So splitting your money between land, business, and reserves reduces your stress massively. And I've also, so going back to Adam Smith, so Adam Smith talks about specialization. So in his book, The Wealth of Nations, so demand supply, rule 1, and then specialization, rule 2. And essentially it's, you create your own, each specialist market. And so investing in each little area would be like a specialist area. And then, that's diversified. If you want to get more diversified, I talk about, you can have, I've created football formation asset allocation, which is building a portfolio around a football team. And then like each player is like a little specialist player with its strengths and weaknesses, and by understanding each specialist asset, it will work better for you. So that's rule 2. So law 3 is rebalance. So rebalance is moving the assets back into the formation that's right for you. So what can happen is one asset can do really well, and then it puts you out of balance. So if shares do really well, for instance, that might go up, and what you need to do is rebalance every year. So take those gains and essentially put them back into the other assets. So then it makes it that you've got the right risk profile that's right for you. So think of it like going to a party, everyone's having a great time, and essentially before 12 o'clock hits, you need to leave that party before there's kind of a rush to the door and everyone leaves, and to get that last taxi. Essentially, it's like in the markets, essentially before a crash, if you rebalance every year, it doesn't matter if there's a crash, because essentially you're rebalancing and there's not going to be a rush to the door like that party example. So economists that are much cleverer than I am have basically calculated that rebalancing is a study that was shown that rebalancing makes much more sense. So don't sell out, rebalance. So don't sell your individual shares, essentially rebalance back into the portfolio that's right for you. And you can do this every year. So set up one date every year and essentially rebalance your portfolio. And this is also taken, the 3 laws of money also takes Isaac Newton's 3 laws of motion. So think of the laws of motion. So inertia, inertia is like paying yourself first. So once you get going, it starts building. It's much easier once you get going rather than being still. Think of it like a rock. Once you start pushing that rock, it's much easier to continue to build that. Then it's much easier to push once it's going rather than when it's staying still. And then the second law of motion is momentum. So it's like diversify. It builds up over time. So once that momentum gets going, it continues to go. Then every action is like a opposite reaction. That's a bit like rebalancing. So it's like the more you pay yourself first and diversify and then rebalance, it's like, the more it will work for you. And it's a bit like we talked about Adam Smith in the past, so Wealth of Nations. So the 3 main points from Wealth of Nation is demand supply, which is like paying yourself first, then specialization, which is like diversification, and he talks about the invisible hand. So the invisible hand is very much like the rebalancing. So it's like the invisible hand rebalancing back into the portfolio that's right for you. And also this takes into the 3 laws of money accumulation. Also uses Lao Tzu, so he's a Chinese philosopher, and he talks about essentially like going with the way, and he talks about essentially like it's like going with the flow. So essentially it's like once you pay yourself first, diversify, and then rebalance, it's like you use that energy for you. So it's like essentially you're using that energy rather than going against the flow, and essentially it goes with the flows of nature. So essentially that's the 3 laws of money accumulation. So pay yourself first, diversify and rebalance, and that's chapter 1 of my book Millennial Money Mindset. If you want the fruits, you need the roots. My name's Neil Doig. I'm the founder and CEO of Money Tips, tax, investment, property, pension, savings. We run investing accelerators. I have an online course and learning experience called Football Formation Asset Allocation, and I do one-to-one coaching and constant consultation. So 3 laws of money accumulation: pay yourself first, diversify and rebalance. Please like, please subscribe, and please tell one person about this channel and this video. Buy the book Millennial Money Mindset. If you want the fruits, you need the roots. It's the 5-step method to getting money mindset, getting more money into your pocket, more time in your day, and less stress in your life. Get your copy today. You can pick it up on Amazon in print, Kindle, or Audible version.
Money mindset.